So good afternoon, everyone, and thanks, Karthik, for such a wonderful opportunity. So I think this is my third time with you guys, and I'm feeling an inch taller with this fantastic introduction, right? But at the same time, I think I have a revenge on you guys. You always slot me for a post-lunch session, right? And even this time also, there's a post-lunch session. So after all the curd rice, it's going to be a bit challenging, right? But I know with this powerhouse of panelists around me, so this discussion is going to be literally getting lighted up, right? I'm very confident about that, right? So I just recollect what once Warren Buffett was saying, right? Only when tide goes out, you'll figure out who's swimming naked, right? So with all the challenges, of course, our financial industry also have seen their ups and downs, right? And I'm pretty sure that now the question in front of us is, how are we going to address these challenges in future using the technology and the efficiency what can be brought in this industry, right? So these challenges can come through maybe the credit preservations, liquidity management, or retaining talents, right? Or even from a consumer aspect. So more so, the other important point or very relevant to this topic today is, how are we going to leverage this TITO, right? So today's technology for tomorrow, right? The likes of blockchains, IoT, AI, ML, and even the hyperledger fabric, chatbot, AI-powered chatbots, and analytics and APIs and so on and so forth, right? So in the last 25 years, I have been always trying to keep one eye on the futuristic technologies which is going to create this impact. But the other one keep challenging me to look at the present challenges for me, right? So now I think we also remember what has happened in 2008, the kind of downturn. We saw many companies going down, right? So now, how do we leverage this technology to redefine the way we are looking at this industry? I think that's a very key focus in front of us. So I'm very thankful to each one of you guys, because you brought in this idea of looking at this technology transformation, right? So we have this topic like technology for tomorrow, redefining both NBFCs and FinTech, right? So we will look at this topic from a 4 different quadrant or 4 different perspectives. So the quadrant 1 being from a customer perspective, and the quadrant 2 being from a branding perspective, and quadrant 3 being from a financial, and quadrant 4 from being a talent perspective, right? So before we get started, so I think we should first acknowledge the fact that the NBFCs and FinTech have done a phenomenal job in this credit scoring of this in this industry. And first of all, I would like to give a big round of applause to this panelist who's representing this industry. So let me start with my first question. Yeah, so from a customer perspective, right? So probably to Anil and Riyaz. So the idea is, so I know this nowadays the customer expectations are very, very futuristic, right? So and all the CXOs are literally thinking of their entire customer journey, right? So given this fact, I have 2-fold questions to that. So probably you can share your real-time experience on how that is going to happen, right? So number 1, what do you perceive as a next from a customer experience point of view? And what is that one core technology do you think is going to bring in revolution in the customer experience space?
Thanks, Karthik. So I think the core, I believe, the fundamental when we talk about the customer experience, the expectation is everything real time, instant gratification. If I need something, it should happen right now. So for example, I mean, couple of years back, we were okay to wait for 1 day for payment transfer. But now if you ask 1 day, it will be like too much since UPI changed the entire thing. Similarly, if I ask about from my segment of the company, we are primarily into fintech lending. We started the company 6-7 years back, and that point of time, the bank used to take couple of weeks or month to process a loan, and we came back saying we'll do it in a 30 minutes. So that was like, wow. But today, the thing is should happen real time. If I applied the loan, as soon as I fill the application, I should get the result whether it's approved or not approved. As soon as I completed a KYC, it should say that KYC is approved or not. Similarly, as soon as I requested for the money, it should be right there in the bank account. So even today, if you apply for a loan, let's say midnight, you will get the money right on the midnight only. And that is only possible if everything should happen through machine. So that would remain the key even in the future, that everything that we do, how to bring that intelligence that is can be processed on the real time. And technology point of view, I think the AI have been in the central, and this we are going through an era of AI revolution. So AI will help us assist in this journey. For example, whether it's a document validation, identity validation, fraud identification, or even in the chatbot form. Let's say if customer is not getting a real-time result, but at least he or she has any query, he should get that. Bot should be available 24/7 to answer that. So that is the key. I think AI would remain with the key technology to make that experience much better.
Sure. So Riyaz, what's your view on that?
So when it comes to, I think I'll just focus on the customer experience side. So obviously, whenever customer experience comes into play as a discussion, the common and whatnot. But I think to summarize it, customers are already engaging digitally in probably every aspect of their lives, whether it is government services or whether they're buying things online. So the benchmark for them is not other financial services providers within the same category. It is now becoming saying that why can't I deal with my finances or deal with financial instruments the same way as I deal with an Amazon or a Flipkart or any other, completely different services which is unrelated to finance, but they just like the experience over there. So I think the benchmarking for us needs to change. And yes, all of these things that my friend spoke about in terms of being more real time or instant gratification, I think all of those things are there to stay. In terms of, I think, what is going to redefine the customer experience, I think there's already a lot of work which has happened from a customer onboarding point of view. You're now able to onboard a customer for the most complex of financial instruments, including loan products, in probably a couple of minutes. And I think if the world goes forward, you probably bring it down to maybe a couple of seconds. You may be able to disburse a loan even within 1 minute if the technology stack within India allows it and if the regulations allow it. I think, but the big difference which is going to be there is going to be in the form of customer service and in the area of customer analytics, and therefore how you will be able to deal and speak to the customer, of which all of us are part of this revolution. I think I'll use the word, we're fortunate to be part of this revolution where regenerative AI, all products like ChatGPT and everything, the way customers will interact with digital platforms with generative AI, I think that is going to be the big changer, game changer, which is there. Cloud and all is there, but cloud hote rahega, all of these things, I think it's a huge step forward and changes the way. And I think that is going to be the big thing which is there, and how do we integrate it very intelligently into our systems. But like I said, there is a lot of use cases for it. For this question, I've stuck only to customer service. And I think, yeah, it's a good thing. It's also very scary what is going to happen to all the people who currently man call centers and all. But we'll discuss that at some other time. But I think that is going to be the big one which is there.
Absolutely. I think that's quite interesting. So probably let me jump to the second view, which is more from a finance side. So probably to Smitesh and Naved. So I know you guys as an NBFCs or FinTech, you have all this flexibility to envisage or visualize and then develop new products and technologies and etc. So can you talk me, I think you have been very actively involved on implementing many things. So can you talk to me about what kind of challenges you really face when you are trying to implement such new age technologies and in terms of testing, development and taking it to the market?
Sure. Let me just give a brief about the company. I represent Ambit Finvest Private Limited. We are a NBFC focused on MSME sectors, catering to unsecured, secured, used car and used commercial vehicle loans. So the biggest challenge which we saw over a period of time is for small people who are business loans. There are a lot of apps with different fintechs and NBFCs who typically say that we do digital loans for business loans. What we decided and the challenges was there in phase one when we started with a particular product, we were able to go till sanction. Beyond that, it was a traditional mode. So we are not able to cater to the customer needs, but we are just able to show him that this is your loan. What we did in the next phase is we actually moved to a true triangulation of KYC, which was the biggest challenge. How do you triangulate KYC? Because sanction, you have credit rules, credit norms which are there into picture. So what we really put our effort was, how do I triangulate the KYC of the customer that he's the actual customer who is actually applying for a loan. So what we have done is, we have just launched our instant business loans for a ticket size of 25,000 to 2.5 lakhs. In this, the true triangulation we have done is, we are making the customer, if he is a GST customer, to upload his GST, his banking. We pull bureau. So if the customer is doing his live KYC from his home, we triangulate his address through the GPS coordinate, through the address which has been provided either through a KYC or a bureau, or we do OCR of his document, triangulate between the GPS, his bureau address and his KYC address, and basically in real time, we have mapped that also to the score which he has on CIBIL, and looking at the difference of the coordinates which we get, we are in real time actually going ahead with the KYC. And the next step what we have done is, we are doing is e-NACH and e-sign. Even for office address, if he's applying from his office, what we have done is, we have done triangulation of the office to GST to where he's applying for the loan. So with this, we have been able to do true digitalization on the KYC phase and being able to do straight through processing of the loan. Then the next steps are e-sign and e-NACH. So we have gone to that level where within a period of 2 hours, we are able to disburse the loan to the customer. Our next phase is to endeavor to do UPI and make it completely friendly. So it's a complete learning experience which we have done from a particular phase of sanction to a true phase of digital transformation, and going all the way to doing a disbursement in a matter of minutes like it typically happens in a personal loan. So this is what challenges we have faced, and we have overcome that challenges because we felt KYC was one of the biggest triangulation how we could do it. So with liveliness and all the checks and the third-party APIs which are available, we were able to achieve this. Yeah.
Sure. So, Naved.
So, in technology implementation complexity, I feel there are two major problems that we face in implementation. One is when we try to understand from the customer, our customers or our target are not very sure of what they really need. They will say, okay, I need this, but eventually when we implement something, it is likely that his need is something else. Also, sometimes our ability to understand, comprehend, and take out what exactly will be a right fit for our target and for our customer becomes a challenge. One of the experience that we had was for a secured loan, an asset-based loan that we implemented. So Adani Capital is into used tractor loan also, and we wanted to give loan as easy as taking loan over gold as a collateral. So we did a lot of research. We spent a lot of time. We visited several states that we operate, speaking to the farmers because they are primarily the ones who will use the application. What we wanted to do was, any farmer who has a tractor, he can go on an app, he can go on a platform, or he can visit a spoke location where there's a screen and he can feed his detail. And he enters his details, and our objective was, once he puts in everything, we are able to disperse everything. That is what we wanted to do. But from the discussion, we narrowed it down that it is an asset loan. There is a certain level of valuation that is needed. The farmer will need to come to a branch once. So we built a journey where we were able to identify the ownership. We were able to identify his land. We were able to underwrite him end to end. And there was this entire journey which was built and released. As soon as we did that and we started a dry run, the first thing that we observed was, since it's a secured loan and he knows that he has to go to a branch, he will enter his name and he will drop off. More than 70% of drop-offs would happen because he knows that he will get a call from the call center and someone will come to his place and it's the same loan that he will receive. While we are working on a TAT that has to be reduced, there's still so many drop-offs that happen. So we changed the journey, we modified, we took a learning from there. We said, okay, what he needs to do is he needs to get an approval in, for the tractor, and we disburse him a partial amount even before the valuation, and then we do a remaining underwriting. However, there also, what would happen is these are farmers, so they don't get money every month. They would get money after 6 months, 3 months. So it is a structured kind of loan. So something to build as a structured loan for the target, for him to be able to do it on the fly is very difficult. So we had to then empower the tech such that he has to visit a spoke, get that repayment decided basis his crop pattern, and then eventually there's a disbursement that happens in tranche and the final disbursement that happens. So there's a multi-level of complexity that comes, especially if you are trying to get into tier 2, tier 3 cities and the markets. And it is good to implement small and in pieces and then move as a complete implementation.
Sure. I think that's quite interesting. So,
I'd like to add to that.
Yeah.
Just this. I think one of the biggest points that we tend to sometimes ignore, because this is a tech-oriented discussion, I think there is a lot of complexity that is coming into play, all for the good, in terms of regulation also. And the amount of oversight and the scrutiny that the regulator and influence that the regulator wants to exert on intermediaries, and given the fact that most of the delivery now happens through technology platforms, so there's a huge amount of pressure that comes into play naturally of complying with that. So whether it is in terms of, I'll tell you, I mean, at the Nuvama group, we're a wealth management firm with a captive NBFC, and there's a lot of consultation papers that have come out from the regulator. I'll just give you one or two points, and all of this is for good, okay? So I'm not, this is not a crib. Since we were discussing issues and challenges which are there, say for example, the capital markets regulator has come out with a consultation paper that says that your headroom on the cloud needs to be 100% of what was your last capacity. I mean, the peak capacity that you experienced in the last 6 months. That's a huge cost that you're going to be bear, that you're expected to put into place.
Yeah.
They don't want anything on Excel. The formats keep on changing every time. And in the last consultation paper that we had, that we're still working through, it's a consultation paper, but the regulator wants to even define what clauses must come into your contract which you're entering into your cloud service provider. So all of this brings it its own level of complexity. It's also going to add to a lot of cost, and therefore the smaller players are going to feel the pressure on their margins as well. So that's a sort of tech challenge that I think a lot of people who are here in this room are going to experience at some particular point of time in their journey.
Absolutely. Absolutely. I agree with you. Riyaz. So, yeah. So, coming back to Yazmeen, so I know you guys are doing a lot of work from the back end stuff. So, so can you share your views on do you really see a role of intelligent automation in the financial service industry?
Yes, definitely. To answer you in short, but to elaborate, automation is nothing but using technology with little or less intervention of human. So at Iron Mountain, what we do is we help the NBFCs to do the back end. Like I heard from Anil, I heard from Naved that they need real-time experience. Customer needs the loans process faster. So how does that happen? We are the backbone for them to help them do the loan processing faster. So we do a lot of validation. We do a lot of process work, KYC, Aadhaar mandate, Aadhaar masking. So a lot of processes are involved at the back end. Maybe the customer does not see at that in the front end. We as an organization at Iron Mountain helps in those processes to ensure what all pain points you said now are taken care by Iron Mountain. So to ensure that it is a real-time experience, as a customer satisfaction, the validation points, there are less errors in the validation points that are there whenever it's either a home loan or a tractor loan, as you said, there are various validation points. All those are minimized. We do the back-end process, and I see that happening by using AI/ML.
Yeah.
I see using that by not only OCR. OCR everybody knows. We use the ICR technology also. So that's why we reduce the accuracy levels are like a 99% is what we say, which I know all of them will say it's 94, but that's what we come to, a 99% by using various platforms and technology. So yes, technology definitely plays in helping all the NBFCs and the banks to ensure that the processing happens faster.
Great. Right. So yeah, so now probably we will quickly jump to the other next quadrant, which is from a brand perspective, right? So I know every good thing comes with a little bit of risk, right? So my question here is, so while there is there is a huge digital revolution is happening in both NBFCs and FinTech, I also see that a lot of cyber attacks, data leakages, and I'm literally concerned is my personal data is still protected or not, right? So from your own experience, can you share how are you boosting the customer confidence and give them that confidence that yes, you are in a safe hand and retain that perspective?
Yeah, I think before coming to the how to build a customer trust, I think most important being a financial entity is that we make the system, we're keeping the security first, then the product. It's always be a secure product. The security has to be the key part of the architecture. So, I mean, and then obviously there should be a number of validations like having a regular VAPT testing, penetration testing of the application as well as the infrastructure, right? And whatever you are doing, you have to get it validated whether the things are going the right direction or not. So take external auditor. So like we work with external auditor, ask them to audit our system from a security point of view. Then also go for the standard certification, for example, ISO, PCI DSS. You can have many things, right? So those certification in a way help give a confidence to the end customer. But I think apart from the certification, we need to have a very fundamental architecture, right, to ensure that security are very very paramount. And most importantly, it's not just about the definition. You have to also have a very strong monitoring capability, which monitor your security of the application. Since mistake can happen by anybody, right, at any time. And if that mistake is captured in the next VAPT on penetration testing, that might cost. So that's why you have to have a regular automated monitoring, making sure that high level security are intact. So these are the things that definitely help. And since we are primarily into fintech lending, apart from the pure cyber security, the other problem that we have been facing about the Chinese app thing, right? And that is another aspect which helps us that, being a fintech and being an RBI regulated. So that is also, we sort of kept it like, we are a regulated entity and things like that. So that is another level of trust built by the customer.
Okay, great. So, Riyaz, what's your view on this?
See, from a customer point of view, I think the way when we talk about trust, it's actually not about what you tell. I mean, all of us have bank account, but you don't go and ask the bank manager, right? कि तुम कौन सा VAPT करता है, तुम्हारा security penetration testing. It's just taken for granted. So it's really about the culture of security from an experience point of view, what the intermediary does with client data. That is something that is more importantly, and I see a lot of now fintechs coming up and saying, you know what, give us your information. We promise we'll not spam you. And how many of us would have signed up with a service provider and then all of a sudden you apply for a credit card, for example, and all of a sudden all credit card companies are calling you and asking you, saying, sir, credit card chahiye ki nahi? This is something that hurts, I think, customer trust, and it hurts the brand a lot more. I think when it comes to security, it is a given. And as the technology head, I can tell you, we struggle for budgets. Technology people struggle for budgets all the time. But when it comes to security, and I think I'm blessed, I don't know about you guys in the panel, I have one of the directors is a US resident. So he anyway comes, he was the ex-president of E-Trade, तो उनको ये सब समझता है कि security में क्या होता है and why all this investment is required. So we generally tend to get our budgets And I think it's a culture. It's more about setting the culture. So you'll do a lot of these, the hard issues like your certifications, your firewalls and all of that. You'll get a lot of external help on that. I think the softer issue is about setting the internal culture, about how client data is confidential, how it's meant to be protected. I don't know the statistic, but I'd like to guess it's a very high number. A lot of fraud happens internally by internal staff. So it's what kind of culture and what tone you set in the organization. That is what I think hurts and it hurts the brand also. And if you do it well, it also helps to create the brand. In my view, Baki sab, ISG and everything is hygiene. And this is my personal take. Some of my colleagues who are part of the ISG team, they're also here. I mean, there is one thing that we don't compromise about, because you don't want to become national news headlines at 9 o'clock in the morning or at 12 o'clock in the night. So you want to avoid that. Yes, it costs money, but it's worth it because it's just one episode. And then, that is something that will really hurt you for a really long period of time. So that's my take on that.
Absolutely. But anyway, thanks for that insider information. You have a lot of budget. I'll talk to you.
Yeah?
Yeah.
ISG budget, yeah. I think, that is something that we invest a lot in.
Absolutely. Great. So, I think while you talk about these kind of technologies, right? Now, probably let's look at this whole topic from a talent perspective, right? That's another key thing. I think there is a war of skill which is happening in this industry, right? And we have seen and experienced what kind of level of challenges we faced on retaining the resources and the cost of retaining the resources, training them, and etc. So, with this all futuristic technology coming in play, right? So, probably Smitesh, share, tell me what is that one skill which you will be to address this void?
Let me start with all us who are a CTO. Somewhere we always talk technology first, but I always believe that if there is business, there is technology. Unless you earn, you will not be able to spend. I think the two critical pillars for any banking or NBFC who is saying, because everybody knows that in NBFC, your cost of funds will always be higher. So as Riyaz rightly mentioned, customer service is the key factor which is there. So I think the focus is how do you keep your customer happy and how you keep your employer happy. I think these are the two assets. If you keep and you're able to make them happy, you have won the war. So when you are talking of employees specifically in the IT field, the things which have really changed is as a CTO, I have to look at outside in. I have to look at business first. I would call myself as a business IT guy, not an IT business guy. I don't see that. I'll give you one example in my previous company in L&T. I always used to make this thing that I will build some castle sitting in my HO in an AC room. But have I sweat my energy to see at the sales level, what is he really doing? So 10 years down the line, on the tractor loan, we implemented a mobile app with a handle scanner, A4 size handle scanner. The technology really failed. But what really worked was we had people at the sales level who were able to push them and became ambassadors of that. And the way we were able to implement that was that if you are doing it right, we will give you the tact and we'll move forward. So I would say that with technology also comes responsibility, but you always have to look from a business in perspective what a customer wants, but not what a technology can deliver this. So I would say today's technologist, when I'm hiring any person, he should have a mix of technology background and a finance background. In a typical scenario, 4 years down the line, you will do a typical SDFC life cycle, write a BRD, do the development, 6 months down the line, the implement, business scenario would have changed. So today, it will be agile mode, learn, develop, experience failure, forget failure, put that again into place. So I think with the agile development, the skill set which is there, people with technology and finance domain, because domain is always important to ensure that you deliver the right thing, what is required, putting customer at the forefront. That's how I would put it.
Yeah, right. So probably Naved, I will add one more point to you before you respond. So probably you can also talk about, is this void is really impacting your business, right? And we as a country, do you really see where as a country we can play to probably address this void in terms of skill sets?
Sure. So, firstly, from the point of the technology, people that we take in, and I completely agree that you have to be business technology and not technology business, and to do so, we need a lot of different domain expertise in terms of tech who understands business. So, I plan resources across who can handle products, who can handle in-house development. We have people who are into .NET, React. We have data engineers, people who can build analytical model. We have people who are, expert in cybersecurity. And we ensure that we are ready for tomorrow also by, continuing to hire freshers and newcomers, and we train them, because it is not always that you will find the right resource at the right time, because many a times a requirement would come as of yesterday, and that is why we ensure that there is a readiness among the team, technology team for the business. And that is why, coming to your point that you asked about the void, I feel that void are sometimes seasonal and in sectors, and if there is not enough planning, we may definitely find that. Uh, that is one way to look at it. But there are two other things that we should also look at in order to ensure that that void is filled. One is that we need to go beyond the metros. We have to go to Indore, Bhopal, and other cities to look for talent which is available, and we need to nurture them. And we need to recruit those talents and set our offices there. Because that will ensure we bridge the gap of void. Another is, from whenever we hire a fresher, we assume, and I do that too, that he has joined and he knows nothing. I will teach him business. I will teach him technology. I will teach him communication. I will teach him how to write a document. And there comes the thing that we need to also have our colleges or program in colleges modified and built such that when we hire someone who is new, also brings in some expertise apart from just the energy and hard work to the table, and that will further reduce the void that we always talk about.
Absolutely.
So on a very similar line, so I think personally I feel the tech talent war was there, that was there from last 2 years, and that was primarily because many companies, probably including MNC, hired in the anticipation. I think that's how now we are feeling that the market is getting
Little
better.
stabilized.
Yeah. Second thing, like you said, I think having a connect with college helps. For example, we do hackathon and maybe some guest lectureships, and see how we connect with college, give an internship for let's say 6 months. That is a two-way learning for a student, as well as we also get to know what is the talent and the energy that a student carries. So these are the things has to be part of the company culture to ensure we are going the right direction. And India as a country, we are a very big country, and I mean there are so many engineers coming out every year. So I don't think that gonna be a serious problem for us. I think like you said, we also opened office in Indore. I think that is keeping it quite well. So I think we have to explore writing, but the skill shortage can be managed.
Absolutely.
It's not a big deal.
So I think, yeah, so one is while we are
Let
trying
me
to
bring one more perspective.
Yeah.
We always think build versus buy. I think what we also have to see is there are a lot of startups who have come in, Gen Z. They are ready to take that extra leap, which allows them. So if you talk of digital India stack, there are so many stack which has come in. If you see, even government is promoting skill-based learning.
Yeah.
If you've gone through their website and see the statistics of people who are really doing self-learning, if you add this to and see, API is the way to go. Collaboration is the way to go. Previously, fintechs were being looked at as a competition to a bank or an NBFC. So if I look from a different perspective, India is growing in a different sense. People are coming from abroad back and starting a startup. You see the number of startups. You see the number of unicorns which has come up. So if you see from a breadth of skill, look at startups. Every startup is in a niche space. Who would have thought of account aggregator which have come in? It's going to change the way of life where we are doing bank statements. We upload thousands of bank pages of statement with account aggregator coming. So the government is also doing a lot of things silently on the digital stack and also bringing in startups. And if you look at that angle also, I think the skill set void would be thing by looking at collaboration and API.
Absolutely, absolutely. So I think that's quite very important. Like while we all trying to tap the rural economy, right, and create that financial inclusion, it's very, very imperative that even the rural talent has needs to be tapped, right? And I've heard there are companies which is now hiring only the school graduates, 10th and 12th, and then train them straight away into what is needed to deliver the L1, L2 support, and that is Zogo Corporations, right? So I've heard that that's a big program which is happening. I think that's quite interesting to see that. Yeah. So now coming back to another financial aspects, right? What is this level of integration between your mainstream lenders like banks and NBFCs? So do you really see this integration between the collaboration between the banks and NBFCs? Because that was going to really determine your co-lending factor, right?
So I think, as rightly mentioned by Riyaz, the regulator has come very clearly on what we need to do co-lending with. There are two types of regulation which are there. You do a true co-lending. When you mean true co-lending with the collaborator who is initiating, let's say NBFC 1 and a bank are tying up, they do real underwriting, and basis both the real-time underwriting, there is a fund which goes into the escrow account. So that's level 1 of co-lending. But public sector banks are not preferring that because it has its own technical challenges. The second is the NBFC basically takes the funds, disburse on his account, and then do co-lending. It's not a DA transaction, but this is the second level where I think the public sector banks are more comfortable. You basically underwrite as per the needs of the co-lending partner and then split the loan. So I think this is the second thing which is coming up. And also if you see there is a company like UB or there is a Night FinTech who has come as a co-lending aggregator. I think even banks are tying up with this co-lending aggregator. So this model is also going up. Again, talking of a FinTech and that. If you do this collaboration, this will really help. See, what is co-lending? Co-lending is basically writing 3 repayment schedule. One is where the customer is, second is your, let's say 20% for the NBFC and 80% for the bank. If I am able to have this 3 repayment schedule and being able to do the reconciliation when the fund comes in and going into the escrow account with different rate of interest. If we are able to crack that, there are fintechs who are coming in, you can write algorithms, and this is what you need to really do from a co-lending perspective. So I think a lot of fintechs and collaborations are coming up, and I think public sector banks are preferring the second mode rather than doing the first mode of real-time underwriting.
Absolutely.
So that way the integration becomes easier.
Yeah, I think you're right. The co-lending model 1 is there for more than 3 years now, and we have hardly seen any success in that aspect. And the model 2 is something which has picked up. We have done a lot of co-lending deals, and be it co-lending, securitization, direct allocation. And when we speak to the bank, they always say that it will happen in an integrated manner only. There's no manual file getting downloaded, being put on FTP. So it has to happen from day one. And we hear this from public sector banks, which had a lot of, which was really rigid in terms of integration. They would never allow anybody to, send an API or a file into their infrastructure. And that is why, as you said, intermediaries like UB has come in place, who's solved a lot of problems. Problems such as an NBFC may have a different kind of repayment schedule, while a bank will have a different, an NBFC may run a 30 by 360, bank will run a 360 by 365. So 30 actual by actual. So that's one complication. We may NBFC will apply late penal in a different manner. Bank will do it in a different manner. So all this has to happen through an integration, and there is an intermediary. But it is not limited to that. We also need to have a very strong data and reporting layer, because once you do a direct allocation, there's also a DPD that gets calculated on a daily basis. We have now the IRAC norms, which both the financiers has to follow. And because the loan is primarily booked at NBFC, it is the job of the NBFC to make sure that all kind of reporting and data is made available seamlessly across and in a secured manner. And all these requires a lot of bifurcation and segregation of the loan, because it is being divided into 2 financiers and with a different kind of payment terms. So integration and automation becomes key in these kind of deals, and it is not possible to go ahead unless you have that as a backbone.
Absolutely. Yeah, that's great. So, yes, probably I'll come to the consumer aspect again to you. Because so, what do you think from your view the focal point of innovation should be, and probably what if I have to ask you to prioritize in the current challenges? So, what is that you will prioritize from a consumer standpoint?
See, I think a lot has been said on the consumer side. I've already spoken about it. I think from regenerative AI, I think rather generative AI, and what you're, since it's so new for us, I think people are still grappling with what could be effective use cases. And you can use it right from writing a tagline for your brand, right to, if I don't, some of you go and try this, put in your company's name and just write over there, write me a poem about Nuvama Group, and it'll write you a whole poem also. So the world, I mean, the sky is the limit. I think if you ask me what is it that I worry about, and what I worry about is not from the consumer side, because most of the stuff on the consumer side will be led by the ecosystem itself. And my colleagues were talking about problems around co-lending. I've always believed, and I think it's not just an Indian phenomenon, it's a global phenomenon. If there's money to be made on the table, no, if the product innovation is there, और उसमें अगर पैसा बन जाएगा ना, तो उसका टेक्नोलॉजी भी बन जाएगा. The people will find an answer to issues that they may face. So all these things are just challenges. Maybe after 1 year we'll find it's very successful. All of that, I think. But when you're talking from a financial intermediary lens, I think underwriting, risk management, and how do you ring fence the organization and protect the perimeter from that? How do you make sure that, again, how do you use generative AI to generate alerts for you, early warning systems? What kind of information you can go beyond just the CIBIL score, or how deep can you penetrate into the analytics of a client across all client segments to understand what is this client doing? And on risk management, it will really depend. There's no one answer for everyone.
Yeah.
I mean, when we look at the risk management that we do, because we're a captive NBFC, and we deal only in, say, capital market products, for us to understand what is the asset that we are lending against, how liquid is that asset, if you want to, if you had to liquidate or invoke the client asset, how quickly will you be able to liquidate it? Will you get a buyer at the other end? All of these things which are there, that is where I feel there's a gap. I mean, there's a lot of progress that has been made, no doubt, but I think on risk management, given that a lot of data is now available, but it's nowhere close to what kind of data is available in the West. Say, for example, which client, what did he do on a weekend and where did he spend his money, or how many footfalls are there in a particular mall if you've lent money to that mall. ये सब data packages अभी आस्ते आस्ते आ रहा है इंडिया में, and once it comes, I think, again, it's how imaginative you can be, going beyond just structured data and integrating into your systems. I think that is going to be the next frontier. Baki client point of view, say, if you, to be very honest now, if you've cracked the product code and if cracked how easy you make it for him because he wants money, how quickly you can give the money in his bank account. And I think उसमें बहुत काम हो गया. But from an organization point of view, risk management and underwriting is where I think there will be challenges as product complexity goes up. That is my view.
Sure, great. So Anil, I know you guys have developed your own product internally for most of the LMS and stuff. So from an innovation point, if you could share some views.
So yeah, I think all our applications are developed in-house, almost 100%. And so I think when it comes to innovation, I think from an individual company point of view, I think everyone is innovating in the BFSI industry, and I think different company might have a different maturity level, but sooner or later everyone would reach there. What I believe something would drastically change the entire ecosystem if we have an industry level intelligence. I'm giving just two basic examples. So for example, we have developed what we say, graph connection between people based on the IP address and the devices and few other parameters. And that started with a POC project, I think 2 years back. But we see that network itself gives a lot of early indicator for syndicate fraud. If I take that proposition to the industry level, and if the same thing should happen at the industry level, that means at the industry level, we would be able to work out very well efficiently. And today, everything is linked with the customer. But since we are actually dealing with the finance, dealing with the digital, we need to bring device in picture, the device fingerprinting. If the same device is used as a fraud at one place, can that, if it's coming at some other place, can it be an indicator for that? So those industry level work is, I think, need to come up. Second, for example, we are talking about the co-lending, right? So basically, we work with various different partners. Technology has enabled us to have a deep integration and provide the best possible service for the customer. But if you look at the inefficiency in the organization, if I work with 10 different partners, I will have to do 10x work. Similarly, that those 10 different partners are eventually working with the 10 other partners. So they are again doing a 10x work. So that multiplication from 10x to 1000x to 10,000x is happening. This can be reduced if we have a standardization of API specification, that every system has to connect in a standard way. So if I have, let's say I'm working with a co-lending partner with, let's say, XYZ bank, if I have to move to ABC, it should be just a change of an endpoint. Apart from, let's say, little customization about the, let's say, different type of LMS setting and all this thing. But if we are able to achieve that as an industry body, the India FinTech ecosystem will, the finance ecosystem will really excel very fast.
Absolutely, great. Yeah. So that's quite interesting to look at multiple views. I think we have gone beyond the technology views as well, right? So it's much more than that. So probably I think we have a few more minutes left. Probably if you would summarize, each one of you, final summary note from what do you think, both from a technology standpoint, how does these new technologies are really making difference either in your own business or from a fintech standpoint?
So for our business, I think, and I personally feel that R&D is not something what a single NBFC should do themselves. It is something that should be done collaboratively, or through certain fintechs coming together, solving problem, which is for most of the agencies that it will do, and that is why for us, we try to believe in training and nurturing more, and using the available services, depend on our partner, and leverage the existing solution and services available. That way, we are able to build a better return on investment, because eventually we are a business or a financial company, and not an IT firm who has to build products and get patents. We have to run business, and till such time there is a return which makes a profitable or the right investment that happens, we invest into newer technologies and solutions. We try to be microservices based, which means that newer solutions or a module that we make, we get it integrated, but we do not recode or rebuild anything, because again, that is not a wise thing to do. So that's how we plan and channel our implementation life cycle. And so net, it has to be something which has a better return, and not just because it is new, we have to use it and implement it.
The way I look at it, that we as a technology leader, we need to continue to look at from a customer point of view, look at the industry, and where are the inefficiency, and how we can fix those inefficiency. Those inefficiency gives one good experience to the customer. Second, it create a new business opportunity. So that would be the key motto, and continue to work on that, continue to look around that. Second, internally from a company point of view, what we believe is that everything in the company has to run by machine. So anything that we do manually today, we keep on challenging, how we can have, that manual process gets replaced. Replacing manual process is sometimes not easy, since you have to go through multiple maker and checker concept. So doing the automation in a right way. Third, I think, with respect to talent, I think the last technology revolution was more about, creating a much more value to the tech people. I think now with the we are living the AI revolution world. This will actually give more control to business, and businesses may be able to do a lot of stuff themselves without having to rely on tech people, and that would be the interesting change that we'll see how it move forward. So basically things like chat GPT, how we can create it as a co-worker. Sooner or later, the sooner we adopt this better it is. I think definitely gonna help increase the productivity, efficiency in the overall organization.
Yeah, to summarize, what I heard from all of them was customer satisfaction, accuracy, efficiency is what I heard from all the NBFCs and the leaders here. So Iron Mountain actually brings that to you all as a support. So if you're instead of building it in-house, if you can outsource those models which require a lot of capex, but you can give it to an outsourced partner, thereby bringing in the customer satisfaction, efficiency, and accuracy, we could help. And this will happen only with the technological products that we have and bring in automation.
Sure.
So 2-3 points only I would, if I had to summarize, I think as technology guardians of the organizations that we represent, I think scale is a very important factor. If you believe India will grow by 7-8% over the next 5 years, 7 years, we will be a $5-7-10 trillion economy. I think credit will be a big driver for that. And the role of credit will keep on going up. So I think scale will be an extremely important piece. And when I say scale, obviously with the complexity that will come along with that, because new needs will come up, and therefore innovation will happen. So that's number one. The second is, I think, from a mindset point of view, think more from an open architecture point of view. How quickly can you integrate with other platforms, and how quickly can other platforms integrate with you? So open architecture as opposed to closed architecture, that is, or the traditional way we sort of build stuff. So that's the second. The third thing which is there is, like I've said it, mentioned it a couple of times, I think AI, but not traditional AI for reading people's checks and just onboarding them. I think it's going to go into another planet. There's another dimension, and therefore the need to think of AI very, very differently, and how you can harness it, whether it is from a risk management point of view, fraud detection point of view, or customer service. I think these are the 3 points: scale, and obviously fourth, which will always be there, is efficiency. There's always going to be a need or a pressure from business to be able to do a lot more with a lot less. So, ye cheeze rahegi.
I'll put it differently. As I mentioned last time, customer is the pillar, employee is the second pillar. Understand the customer needs way ahead. How do you differentiate your company from other? You are not going to differentiate on price for an NBFC. So it's your service. How fast you can give TAT. To aid this, it will be technology. I think regulators have also changing the way they have been thinking. Collaboration, startups, India stack. And I think India as a young organization in the next 7 years, that's how it is. If you put all these pillars together and think of customer as the central focus, with employee as the next focus, and try to build technology and collaborate around it, I think you'll have to achieve what you are. Change is the only constant. That's how I would put it.
Absolutely. Sure. So thank you very much. I think it was quite interesting to look at your views and etc. I know, like as we originally discussing, the challenges can come from any fold, right? It can be either a capital preservations or maintaining liquidity or even retaining talents or being very close to the customer, right? So given all this as a fact, but I'm pretty sure that this is very evident that all these new age technologies are definitely helping both NBFCs and FinTech in many ways to come up with your new business models and ideas. And of course, this in a way helps to include the financial inclusions and contribute to the growth of the country. So thanks everyone, and it was quite interesting. And probably we'll open, we have a few more minutes, so if there is any questions from audience to the panelists.
Maybe if you want to take this question, you talked about scale, and there's still a good 20%, if I'm right in saying this, your unbanked population. What are fintechs or NBFCs doing differently, and how are they anticipating to address this challenge or address the unbanked population's financial needs?
So I'll tell you, the organization that I represent, हमको वो 20%, that's not our target market at all. I think the needs for the upper 80% is what we are focused on, and even within the 80%, we're a wealth management firm, and I hope everyone experiences this in your life. As you start getting more money, your needs also change and the complexity changes, and therefore the need for people like us who come in. So I think maybe my colleagues over here, from an unbanking point of view.
Yeah, so let me not take this kind of question from a company's perspective, but I think microfinance, that's where the unbank is banking. JAM, the government, what he has done, Jan Dhan thing, money has reached their account. And I think the unbanks are being banked through microfinance. It's a JLG based loan which is catering to the masses. I think women entrepreneurs in a big way. And I think that will continue as long as there is a need and there is an urge. These microfinance companies will be able to serve to that customers, and with government also pushing directly to the bank accounts with no middleman. The unbank will have bank accounts, and that's how it will move ahead. So I think that's how.
So so looks like there's no more questions, and probably thank you very much. You're a lovely audience, and then thanks for your view.